Hello guys, welcome to the question solving series for CMA US part 1 where we are solving the questions for a statement of cash flows. So in total we are going to solve some 42 questions. With the help of that you will understand clearly how the statement of cash flows questions will be in the actual exam, and I will also share some tips and tricks with the help of which you can easily tackle these questions in the examination. Let's begin with. So question number 1. Which of the following best describes the primary purpose of the statement of cash flows? That is, what is the objective? Why do we prepare the statement of cash flows? Option A, to report a company's financial position at a specific point in time. Is it statement of cash flows or balance sheet? This is about balance sheet. Option B, to report a company's cash inflows and outflows classified into operating, investing and financing activities during a period. Is this the correct answer? Yes, because that's why we prepare the statement of cash flows, to report the cash inflow and outflow, and we can easily classify it into operating, investing and financing activity. Then option C, to reconcile the beginning and ending balances of stockholders equity. That is to reconcile the balance of the stockholders equity. So this will go under the statement of changes in stockholders equity, not in the statement of cash flows. And option D, to report the items of other comprehensive income and not included in the net income. This is a part of the statement of comprehensive income. So very clearly option B is the correct answer. Then question number 2. The statement of cash flows classified all cash flows into which three categories? We all know: operating, investing and financing. Very clearly option B is the correct answer. Question 3. Which of the following is the best definition of the cash equivalent for the purpose of a statement of cash flow? Now what is a cash equivalent? A cash equivalent means something which can be very easily converted into cash, and it is very close to its maturity, and also the price is also of that particular instrument is not going to change that easily. So let's see which option is correct. Option A, any marketable security regardless of its maturity date. Is cash equivalent any marketable security? No, not at all. Option B, a short-term highly liquid investment that is readily convertible to a known amount of cash and is so near maturity that it presents insignificant risk of changes in value. Is option B correct? Yes, option B is the correct answer. Then option C, any investment in equity securities held for the trading purposes. Is this correct? No, this is also not the correct answer. Then option D, a certificate of deposit with an original maturity of 18 months. Is this correct? No, this is also not correct, because this also does not qualify as a cash equivalent. Then question number 4. Which of the following statements about the direct and indirect methods of preparing the operating activity section of the statement of cash flow is correct? That is, which of the following answer is correct related about the when we discuss both the operating activity when it is prepared using the direct or indirect method. Option A, the indirect method reports the major classes of gross cash receipts and gross cash payments. Is this correct? No. Why? Because this is talking about the direct method, not the indirect method. Then option B, net cash flow from operating activities is the same regardless of whether the direct or the indirect method is used. Is this correct? Yes, this answer is correct, because net cash flow from operating activities will give the same answer whether we use the direct method of calculation or indirect method of calculation. Then option C, the direct method begins with net income and adjusts for non-cash item. No, this is about the indirect method, not the direct method. So again option A and C are like just the reversal of what it should actually be. The wrong names have been mentioned over there. Then option D, a company using the direct method is not required to disclose a reconciliation of net income to net cash flow from operating activity. Is this correct? No, this is not correct. Why? Because even if a company is using a direct method, there should be a supplementary schedule where reconciliation of the net income to net cash flow from operating activity should be given. So that's why option B becomes the correct answer. Question number 5. Which of the following would not be classified as an operating activity on the statement of cash flow? That means, first of all, which all the line items that we record on the statement of cash flows, anything which goes under the income statement. So which of these is not classified as an operating activity? So first is cash received from customers. Is it a part of operating activity? Yes, why? Because this is a sales and sales is recorded on income statement and it will be directly recorded on my operating activity. Then cash paid to employees. Cash paid to employees will be the salaries, right? Salaries will be recorded where? On my income statement. It will be recorded on my operating activity. Then option C, cash paid to purchase equipment. When we pay cash to purchase the equipment, it is a non-current asset. Where it will be recorded? It will be recorded on my income statement. And it will not be recorded on my income statement. It will be recorded as an investing activity. So option C is not correct. Then option D, cash paid for income taxes. Cash paid for income taxes will be recorded where? On my income statement, and it will be recorded as a operating activity. So that's why option C becomes the correct answer. Then under US GAAP, cash dividends paid to a company's own shareholders are classified as, that means cash dividends paid to company's own shareholders. Where it should be recorded? It should be recorded under the financing activity. So that's why option C becomes the correct answer. I clearly remember when I was discussing this particular topic, like related to like dividends, where it should be recorded. I clearly remember highlighting that cash dividends paid for the company's own shareholders, that will be recorded under the financing activity. Then question 7, under US GAAP, how are interest paid and interest received classified on the statement of cash flow? So interest paid and interest received, both are classified as what? Both are classified as cash flow from operating activities. So that's why option B becomes the correct answer. Question number 8. When using the statement of cash flows to evaluate a company's ability to continue funding its operation without relying on additional external financing, the most relevant section is to examine the cash flow from operating activity. Why? Because the question is talking about the not relying on the external financing. Where do we report the external financing? We report it under the financing activity. And does investing activity will give us this particular answer? No. Why? Because with the help of the operating activity only we will be able to make out whether we can do the investing activities without using the external funding or not. So that's why option C, operating activities, will be my correct answer. Next question. Whenever you see a question which is lengthy, which is more than of 2 lines, just read the last line of the question. What is the last line of the question? What amount should be reported as cash inflow from operating activity? So that means we have to calculate cash inflow from operating activity. Now let's read the question. Larkspur's Incorporation's controller is preparing the statement of cash flow using the direct method and has listed the following cash inflows for the period. Collections from customer for goods sold. Collections from customers for goods sold is given how much? Is given as 1,80,000. Okay. Then proceeds from sale of investment securities. Does proceed from sale of investment securities qualify as an operating activity? No. Why? Because it will be reported as an investing activity. Then proceeds from issuance of additional common stock. Issuing of common stock will be reported where? It will be reported on my financing activity. So it will be recorded where? It will be recorded in my financing activity. So that's why only 1,80,000 will be reported as what? Only 1,80,000 will be reported as my operating activity. Moving on to the next question. Which combination correctly describes the effect of credit card interest incurred and paid during the period on company's retained earning and its statement of cash flows? Okay. Now, so which combination correctly describes the effect of credit card interest? First of all, what is credit card interest? It's usually the normal interest. It will be classified as an interest expense on my income statement. Now, it is asking about the effect over 2 places, on statement of cash flows and on my retained earnings. Since it's an interest expense, it will be shown where? It will be shown as an operating outflow. So either option A or option B is my correct answer. Option C and D anyways is not my correct answer. Why? Because interest paid and received is classified as what? Is classified as an operating activity. So this is my operating outflow. Now what is the impact on retained earnings? So here is where the students will get confused. Now I'll give you one thing. Whenever you have net income, the net income flows where? The net income goes to the retained earnings. Now when you have the interest on the credit card, the interest is recorded as an expense on my on my income statement. that interest is reducing my net income. If my net income is getting reduced, the lesser amount is being added to my retained earning. If lesser amount is being added to my retained earnings, that means my retained earnings is getting decreased. So that is why option A is the correct answer. So whenever you see anything new, any new word comes, and we should not get panicked in the exam. We should just follow the flow. We should just try to relate the things, how the things relate. Okay. Now, moving on to the next question. Question number 11. Under the indirect method, depreciation expense is what? Under the indirect method, we add back the depreciation to the net income. Why? Because it is a non-cash expense. It is reduced by the net income, but in reality, there is no cash outflow. So that's why clearly I can see that option B is my correct answer. Why option A, C, D are not correct answer? Let's have a look. Option A, deducted from net income because it reduces cash. Does depreciation reduce cash? No, not at all. Then option C, ignored because it does not appear on the income statement. It is ignored. Is it ignored? No, not at all. We add it back to the net income. Then reported as an investing cash outflow. Is it an investing cash outflow? No, not at all. Depreciation is not even a cash transaction. Then question number 12. Under the indirect method, a gain on sale of equipment reported in net income should be. Under the indirect method, a gain on sale of equipment reported in net income should be. A gain on sale of equipment is done what? Is done what under the indirect method? It will be reduced. It will be deducted from my net income. Why? Because the actual sale amount, the proceeds from sale of that equipment will be recorded in my investing activity. So that is why option, let's see option A, B, C, D. Which one is the correct answer? Option A, added to net income in the operating activity section. Is it reported in the operating activity? No, not at all. So that is not the correct answer. Option B, deducted from net income in the operating activities section because the related cash proceeds are reported in investing activities. Yes, this is what the explanation which I have already given. So that's why option B will be my correct answer. Option C, ignored entirely since it does not affect cash. No, it's not ignored entirely. It will be reported in my investing activity. Option D, added to investing activities cash inflows. Is it added back to investing activities cash inflows? Yes, it is added back to the investing activities cash inflow. So no, it's not the correct answer because it's not going to be added over there. It's going to be subtracted over there. So that's why option B is my correct answer. Question number 13. Under the indirect method, a loss on sale of a plant asset would be. Under the indirect method, if there is a loss of sale on a plant asset, where it should be recorded? First of all, if there is any loss, see, this is just the opposite of the question number 12. In the question number 12, what we did? We deducted it. So over here, we need to add it back. We need to add it. So we can see added word is mentioned only in option A and D. I will not even have a look at option B and C in my exam because it says deducted and ignored. It's never deducted or ignored. It's always added. Now see where it is added to net income in the operating activity section. Is this the correct answer? Yes, this is the correct answer because option D is saying added to financing activity. Do we add anything related to a long-term asset in my financing activities? No, not at all. So that's why option A becomes the correct answer. Moving on to the next question. Question number 14. Under the indirect method, an increase in accounts receivable during the period should be what? Okay, I remember giving this cheat code. I remember giving this cheat code to my students that you have to just memorize this. I have already explained this in depth when I was talking about the statement of cash flows, but over here I have just written it down over here. Why? Because now we are gonna do a lot of questions on statement of cash flows. So with the help of this equation, it will be very easy for us to understand. So option, first of all, if there is any increase in current asset, that will be subtracted from my net income when we are calculating the cash flows from operating activities. If there is any decrease in current asset, that is added back to our net income. Then coming to the liabilities, if there is increase in my current liabilities, it is added back to my net income. If there is any decrease in current liabilities, that is subtracted from my net income. That's all. So now coming to the question, Under the indirect method, an increase in accounts receivable during the period should be done what? Increase in accounts receivable, increase in current asset, that is it should be subtracted. Why? Because it means that the company recognized the more revenue than the cash it actually collected. So that means my net income is higher, my net income is overstated the cash generated, and that's why the increase must be what? The increase must be deducted, because we have not actually received cash, but we have already included it as a sales revenue, and that's why my net income is higher. So that's why I need to do what? I need to deduct it, I need to reduce it. Question number 15. Under the indirect method, a decrease in inventory during the period should be. Under the indirect method, if there is a decrease in inventory, a decrease in current asset is added back to our net income. So what do we do? A decrease in inventory means what? That the company sold the more goods than it actually purchased. So what is happening? So that means we are actually freeing up our cash. We are getting more cash with which the inventory was being tied up. So that is why it is added to my net income. The decrease in inventory is added to my net income, because my inventory is getting freed. I am getting more cash in return of that. Next question, question number 16. Under the indirect method, an increase in accounts payable during the period should be done what? Increase in accounts payable. Accounts payable is what? Is my current liability. Current liability is increasing, it should be added. But what's the logic? Because increase in accounts payable means the company purchased goods on credit without actually paying cash for them. So that means expense was recognized in my net income. If I'm recognizing the expense but I'm not actually paying cash for it, so I should do what? I should add back that expense, because I have not paid cash yet for it. So that's why it is increased, it is added back. Now coming to the question number 17. Bramfield company reports net income of 4,20,000 for the year. Additional information is given over here. Depreciation expense is given over here. Gain on sale, everything is given. Let's read the last line. Last line of the question says, what is the Bramfield's net cash flow from operating activity? They just want to know what is the net cash flow from the operating activity. So I'll open my calculator. So the company says net income is given as 4,20,000. Okay, then depreciation expense. Is depreciation should be included? No, depreciation should be added back, because it's a non-cash expense, so we should add it back. Then gain on sale of equipment. Gain on sale of equipment should be reduced. Why? Because it will already be recorded in my investing activity. Then increase in accounts receivable. Increase in current asset. Increase in current asset should be done what? It should be reduced. Then decrease in inventory. If there is any decrease in any of the current asset, it should be done what? It should be added back. Then decrease in accounts payable. Decrease in current liability should be what? It should be subtracted. Then increase in current liability, increase in accrued liability, it should be added. So we are getting 4,44,000 as the net cash flow from operating activities, and that is my correct answer. Okay, moving on to the next question. Under the indirect method, the amortization of premium on bonds payable should be. Okay, first of all, what is bonds payable? Sometimes when the companies have to borrow money from the public, they issue a piece of paper that is termed as bonds. On that bond, an amount is mentioned that, okay, if I give you this paper, you have to give me X amount of money. Now sometimes what happens, if suppose on that piece of paper 90 bucks is mentioned, but because of my company's goodwill or maybe for XYZ reasons, you gave me 100 bucks. So 90 was supposed to be borrowed, but I borrowed 100 from you. So that 10 extra amount is what? Is the premium amount, is the premium on bonds. So that extra amount has to be amortized every month, every year or maybe every month, depending on the company's business. Now, what we do when we are paying interest on the bonds? Why? Because we have borrowed money from the public, so we need to pay interest on that money. Paisa, whenever we are taking loan, loan money, we have to pay interest. Now whenever we are paying interest on these bonds, what we need to do? We need to remove the interest amount by, like, we need to deduct some amount of bond amortization amount from the interest amount. If my interest amount is getting reduced because of the bond amortization, so bond amortization is actually not a cash cash expense, or maybe it's not qualifying as a cash expense, and it's also nothing related to cash. So what we have to do, we need to do what? First of all, my interest is getting reduced. If my interest is getting reduced, what is happening? My profit is inflated. If my profit is inflated unnecessary, so that means what? We need to correct my profit. I need to correct my profit means what? I need to correct my net income. So that's why I need to reduce my net income. So that is why in this case, amortization of a premium on bonds payable, what we need to do? We need to deduct that amount. We need to deduct that amortization amount from my net income. Why? Because that amortization premium amount is reducing my net income. If my reducing my income and interest expense. If my interest is getting reduced, my net income is being higher, which is not correct. So that is why option B will be my correct answer. Moving on to the next question. Under the indirect method, an impairment loss on goodwill recognized during the year should be. Under the indirect method, an impairment loss on goodwill. What is impairment loss on goodwill? It's similar to my depreciation expense. Like amortization, like depreciation, similarly is the impairment, where actual cash is not going on, but we are recording it as an expense on my income statement. So what should we do? We should add it back to my net income, right? So that is what option A will be directly my correct answer. Moving on to the next question. Crest Hill Company owns 30% of Ashworth Incorporation and accounts for the investment using the equity method. Now it's a long question, it's a lengthy question. I will read the last line. What adjustment should Crest Hill make to the net income to arrive at the cash flow from operating activities? Okay, adjustments it's talking about. So now let's read the question. So we can just, when we read the last line of the question, we just get the context. So we read the question in that particular way. I know that, okay, I need to see that what adjustment needs to be done. So I will read the question accordingly. So Crest Hill Company owns 30% of Ashworth Incorporation and accounts for the investment using the equity method. Now during the year, Crest Hill recognized 85,000 of equity income from Ashworth, its share of Ashworth's net income, but received only 20,000 in cash dividends from Ashworth. Under the indirect method, what adjustment should Crest Hill make to net income to arrive at a cash flow from operating activities? That means they have already recognized 85,000 of equity income. Crest Hill has already recognized as 85,000 in its books of accounts, but they did actually receive 85,000 cash. No, it only received 20,000 cash. So that means 85,000 may say, from 85,000, 20,000 they have received. So 65,000 is what is the extra amount of money they have recognized. So that means I should deduct how much? I should deduct 65,000 from my net income in order to arrive at the figure of the cash flow from operating activity. So let's have a look at the option. Option A. Deduct 85,000 and add back 20,000, a deduction of 65,000. Is this correct? Yes, this is the correct. Why? Because we should reduce the 85,000 and add back the 20,000. So we will get a net deduction of 65,000. Then option B, add back 85,000. We should add back the 85,000. Is this correct? No. Why? Because we are not going to add it back. This is going to be subtracted. We did not receive it. Then deduct 20,000 only. Is this correct? No, not at all. And no adjustment is necessary is also not the correct answer. Moving on to the next question. Question number 21. Under the indirect method, an increase in a deferred tax liability during the year should be. Deferred tax liability means what? It's kind of a current liability. Current liability is increasing, so what? It should be added to my net income. That's why option A is the correct answer. Rest of the answers are not correct. Why? Because increase in deferred tax liability means what? My income tax, the income tax expense that is reported on my income statement is actually higher than the actual cash we paid during the period. So that's why my net income is what? My net income is lower. It has been understated. So that's why we need to do what? We need to add it back in my net income in order to fix the extra amount of expense we recorded over there. So that is why option A is my correct answer. Question number 22. Under the indirect method, an increase in prepaid insurance during the period should be done what? See, prepaid insurance is what? It's a prepaid expense. Prepaid expense is what? It is a current asset. So how it should be recorded? Added to the net income, deducted from net income, reported as investing cash flow, or D ignored. C and D is anyways not the correct answer. So there is what? There is a increase in my prepaid expense. It is an increase in my current asset. An increase in current asset should be done what? It should be deducted from my net income. So that's why option B will be my correct answer. Okay. Now, moving on to the question number 23. Which of the following items included in net income would require no adjustment when reconciling net income to net cash flow from operating activities under the indirect method? So that means any of the items, that means we have to find out which of the items will not be considered when we are doing this calculation, calculating the net cash flow from operating activity from net income. So let's have a look. Depreciation expense. Is depreciation expense is adjusted? Yes, it is adjusted. So that means this is not the correct answer. Gain on sale of land. Is gain on sale of land adjusted? Yes, it is adjusted. So again, it is not the correct answer because we adjust it during the calculation of the cash flow from operating activity. Option C, cash sale revenue for the period fully collected in cash with no receivable created. Is this the correct answer? Yes. Why? Because cash sale revenue, we have already received the entire cash. We do not do any adjustment for this, and it is also not creating any accounts receivable. So that is why this is not an adjustment. So this is my correct answer. Why? Because it will require no adjustment when I am reconciling my net income to my net cash flow from operating activity. Option D, an increase in accounts receivable. What happens when there is an increase in accounts receivable? We decrease it from my net income. So that is why this is also not the correct answer. Question number 24. Delmore Corporation reports net income of 3,10,000 for the year. Additional information is given over here. So last line says that we have to calculate the cash provided by the operating activity. Let's open our calculator and do this question on there. So net income is given over here clearly. Then depreciation and amortization is given as 48,000. So I need to do what? I need to add it back, right? Okay, I just pressed the wrong key. 3,10,000 plus 48,000. Okay, now stock based compensation expense. This is a non-cash expense which I have recorded. So that means I need to add it back. Loss on sale of investment of 7,000. Loss on sale of investment of 7,000. So we should do what? We should add it back. Why? Because this will be recorded where? This will be recorded over there in my investing activity. So I will add this back. Okay. Then increase in inventory. Increase in inventory should be done what? We should reduce it. We should reduce by how much amount? We should reduce it by 15,000. Then decrease in accounts receivable. Decrease in accounts receivable should be done what? Decrease in accounts receivable should be added. Then increase in income taxes payable. Increase in income taxes payable should be what? It should be added back. So how much we are getting? 3,85,000 as the net cash provided by the operating activities. Okay, starting with question number 25. 25 number question is quite lengthy. So like we can see, it's almost a 4-line question. So whenever you see such lengthy question, we don't have to read right from the beginning. First of all, what should be our approach? That we should read the last line of the question. What is the last line of the question says? What is Sequoia's net cash provided by operating activities? That means we need to calculate what? We need to calculate net cash from operating activities. Okay. One important thing, guys, this is one of the most important questions of this particular question bank of all the 42 questions. This is an exam level question and there is a very high probability that you can get somewhat similar kind of a questions in your exam. Why? Because this is related to calculation of net cash flow by operating activities using the indirect method. Okay, so I have already written down everything over here in my this thing notepad. Okay, so the question says, as we have to calculate net cash by operating activities, so that means we are very clear that we have to focus only those particular numbers which is directly related in calculation of the net cash by operating activities. Now Sequoia Corporation reports net income of $95,000. So net income of $95,000 is given. I have written down that. Then during the year, old equipment with a cost of $40,000 and a net book value of $34,000 was sold for cash at a gain of $6,000 and new equipment was purchased for $70,000. Okay, this much information is given about the equipment, but is this information, all of it is relevant? No, only few of it. So old equipment with a cost of $40,000 and a net book value of $34,000 was sold. So the cost of the equipment is $40,000 and the book value is $34,000. How does the book value is lower than the cost. Why? Because there might be some depreciation, there should be a separate depreciation, that's why. So 40,000 minus 34,000 is my accumulated depreciation. This is my accumulated depreciation on that particular equipment. So that means whenever, just remember this rule guys, there is this one important rule is very important, that whenever we are selling off any equipment, whatever depreciation is there, whatever accumulated depreciation is present or maybe is levied on that particular equipment, that is removed from my depreciation account, that is removed from my accumulated depreciation account, in order to ensure that only the depreciation which is related to the assets which are there in the business, that is there. So that's why whenever an asset is sold, the accumulated depreciation that is charged till the date when it is sold, that is removed from the accumulated depreciation account. So that means this 6,000, this will be removed from the accumulated depreciation account. Then moving on, selected comparative balances are as follows. Acha, new equipment was purchased for 70,000. Will this be recorded in operating activity? No, this will be a part of my investing activity. So this again, this information is not at all useful for us. That's why I have not noted it down over here. Then coming to the selected comparative balances are as follows. That means the beginning balance and the ending balance, the opening balance and the closing balance has been provided to us. So accounts receivable is given 28,000 last year and 24,000 this year. So that means there is a 4,000 decrease in accounts receivable. Then inventory 60,000 last year and 68,000 this year. There is 8,000 increase. Then accumulated depreciation 45,000 last year and 54,000 this year. Okay, I have by mistake closed this. Yeah, accumulated depreciation 45,000 last year, 54,000 this year. But again, we have to remove the depreciation for the asset which is being sold. So that's why we have to do what? We have to do adjustment for that. Then accounts payable 15,000 last year and 12,000 this year. So accounts payable, there is a decrease. The most crucial calculation is the calculation of depreciation expense, because if you don't calculate it correctly, you will be very getting the other options, and there will be a very high probability you are going to mark the wrong answer. So please guys, please pay attention on the calculation of depreciation expense. Now accumulated depreciation at the beginning of the year, in that we will add the depreciation expense for the current year, and we will remove the depreciation for the asset that is being sold, and then we will get the closing value. So out of this equation, what all is given to us? We have been given the 45,000 as the opening balance of the depreciation account. Then we have the depreciation expense that we have to find out, so that I have written it as it is. Then we have the depreciation for the asset sold, which is 6,000. How did we get this 6,000? 40,000 is the cost of the asset which is being sold, but its book value is 34,000. So why there is a reduction in the cost? Because that amount is denoting the accumulated depreciation. Okay, so that means 6,000 is my accumulated depreciation for the asset that is being sold, and the closing balance is given as 54,000. Now when depreciation expense is being calculated, how much did we get? We get 15,000 as my depreciation expense. I will take out my calculator now, and we'll start doing the calculation in order to calculate the cash provided by the operating activities. Okay, I'll start my calculation. So first of all, we have our net income. What is the net income? Net income is the 45,000. Then we have the depreciation expense which we have calculated. Depreciation expense of 15,000. The depreciation expense has to be added back to my net income. Why? Because it is a non-cash item and it should be added back in my net income. So plus control Z, yeah, we have to come here, 95,000 plus 15,000. Then we have the accounts receivable. There is a decrease in accounts receivable. My current asset is decreasing, so that means I need to do what? I need to add it in my adjustment. Then inventory is increasing. If my current asset is increasing, that means I need to do what? I need to decrease it. I need to do what? I need to decrease it. Okay, then my accounts payable is decreasing by 3,000. My accounts payable is decreasing by 3,000, right? So if my accounts payable is decreasing by 3,000, that means current liability is decreasing. So what I should do? I should also reduce it from my current asset. Now as of now, many of us will mark 1,03,000 as the correct answer. But is this the correct answer? No. Why? Because the question is saying that the equipment was sold at a gain of 6,000. So that means we would have recorded this gain in my income statement. So in my net income, this gain would have been included. But is this gain actually recorded in operating activity? No. Why? Because it will go into the investing activity. So we need to do what? We need to reduce this gain, and we are getting 97,000 as my cash provided by operating activities. This is a full-fledged question of calculation of the net cash provided or maybe net cash used by operating activities under the indirect method. I hope this is clear to you guys. Let's move on to the next question. So the next question says, Video Incorporation reports the net income of 2.4 million for the year. Additional information is given: depreciation on fixed assets, gain from sale of land, increase in accounts payable, dividends paid. What is various net cash provided by operating activities? Simple question. Let's use our calci. So the question is saying net income is 2.4 million. Okay, then depreciation on fixed assets. So depreciation is a non-cash expense. We should add it back. We are adding it back. Then gain from sale of land. Gain from sale of land is a part of investing activity which is included in my net income, so it should be removed from my net income. Then increase in accounts payable, 1,80,000. Increase in accounts payable, that means increase in current liability. It should be what? It should be added. Then dividends paid on preferred stock. Is dividend paid on preferred stock is something we will record on operating activity? No. Why? Because this is a portion which will be allocated to the financing activity. So that's why 3.31 million is going to be our correct answer. Coming to the next question, which of the following is correctly excluded from the operating activity section when using the indirect method to reconcile the net income to net cash flow? That means which of this we are not going to include in our calculation, is not a part of the calculation when we are using the net income to derive the figure of the net cash flow from the operating activities. A, depreciation expense. Is depreciation expense adjusted? Yes, it is added back to my net income. Option B, dividends paid on preferred or common stock. Is this adjusted anywhere when we are calculating cash flow from operating activities? No. Why? Because this is recorded under the financing activity. Hence, option B becomes the correct answer. Option C, gain or loss on sale of non-current asset. Is this anywhere adjusted? Yes. Why? Because gain or loss is being adjusted in the net income accordingly, because this is a part of investing activity and this is already included in the net income. So that's why to nullify the impact, we have to do the adjustments accordingly. Then D, an increase or decrease in accounts receivable. Yes, this will be adjusted. Why? Because this is a current asset. Any increase or decrease in current asset or current liability is adjusted in my net income. Coming to the question number 28. Thistledown's company's accumulated depreciation account had a balance of 2,10,000 at the beginning of the year and 2,55,000 at the end of the year. During the year, equipment with accumulated depreciation of 38,000 was sold. What was Thistledown's depreciation expense for the year, as would be added back in the operating activity section of the statement of cash flows? Yeah, so this question is just a small portion of the question number 25, which we have already done. So let's open our notepad and try solving this question. So again, I'll just remove this. Yeah, so this equation we are going to use, that accumulated depreciation. How we are going to calculate? We will take the opening balance. So what is the opening or the beginning balance? This is 2,10,000. In that, what we need to add? We need to add the depreciation expense. We need to add the depreciation expense. Again, that is what we have to find. Then less depreciation for the asset sold. So we have the equipment with accumulated depreciation of 38,000. Okay, and we have the closing balance. The closing balance for the depreciation has been given over here as what? 2,55,000. Now if I do this calculation in my calculator, if we do the calculation, so let's do this calculation. So this will be 2,55,000 minus 2,10,000 plus 38,000. 8,000. So that is giving me 83,000 as my depreciation expense. Very simple, straightforward question. What we need to keep in mind that whenever an asset is being sold, the accumulated depreciation on that particular asset has to be what? Has to be removed from my accumulated depreciation account. Moving on to the question number 29. Now we will have the questions based on the investing and financing activities. So the question says the purchase of equipment for cash should be classified as a very simple investing activity. Yes, sometimes you get that simple straightforward questions in the exam. But again, that is not like every other question will be like that, because we have 100 MCQs. So maybe one MCQ can be like that straightforward and that easy. Then next question. Cash proceeds from the issuance of common stock should be classified as a obviously financing activity. That's what is so simple. Then next question, which of the following correctly classifies the cash flow effects of a company's outstanding bonds payable? So that means what will be the cash flow effect of the company's outstanding bonds payable? What is bonds payable? Bonds payable is a liability for the company. So liabilities generally when we repay them will be reported where? It will be reported in my financing activity. But again, let's have a look at the options. What all options do we have? Option A, both the prepayment of the principal and the payment of interest are financing activities. Is this correct? No. Why? Because when the interest, whether it is paid or it is received by us, whether we pay it or whether we receive it, it will be a part of my operating activity. So interest payment will not be a part of my financing activity. Only the principal repayment will be a part of my financing activity. So option A is incorrect. Option B, the repayment of principal is a financing activity. Correct. The payment of interest is an operating activity. Is this correct? Yes, this is correct. So option B is my correct answer. Option C, the repayment of principal is an operating activity. The payment of interest is a financing activity. Is this correct? No, this is not correct. Why? Because the repayment of principal is a financing and payment of interest is a operating. So it's given vice versa. So this is also not correct. And option D, both the repayment of principal and repayment of interest are investing activities. No, not at all possible, because this is the company's own this is the company's own outstanding bonds payable. So that's why option B will be my correct answer. Question number 32. The proceeds from the sale for available for sale debt securities should be classified on the statement of cash flows as available for sale debt securities. That means we have done some kind of an investment and we are selling off this available for sale debt securities. So this will be like what? This will be my investing activity. Question number 33. Kestrel Manufacturing acquired a warehouse by issuing a 500,000 long-term note payable directly to the seller. No cash changed hands. How should this transaction be reported on Kestrel's statement of cash flows? So they there is one business, they bought a warehouse, but instead of paying cash, they have done what? They have issued a note payable, long-term note payable, and no cash changed hands. That means none of the cash came into my business or none of the cash went out of my business. So that means this is not gonna be appearing anywhere on my cash flow. Nowhere it will be reported. That should be very clear. Why? Because one principle we should always remember is that in the statement of cash flows, only those transactions in which the cash has outflown out of my business or it has inflown into my business, that will be reported. So option A, as a 500,000 investing outflow and a 500,000 as a financing outflow. No, not at all. No cash transaction is there. So how it is possible? Option B, it should not appear within the body of statement of cash flows but must be disclosed separately as a significant non-cash investing and financing activity. Is this option sounding correct? Yes. Why? Because it clearly says that this transaction should not appear anywhere on my statement of cash flow, but it should be disclosed separately as a significant non-cash investing and financing activity. Why? Because we have acquired something huge. We have bought something very significant for a business. Though we are not paying any cash, but the users of financial statement should be aware about it. So that's why we should separately disclose it in my non-cash investing and financing activity. Option C, as a 500,000 operating outflow. Is there any outflow of cash in this? No. So option C is also incorrect. Option D, it is not required to be disclosed anywhere in the financial statement. Is it correct? No. Why? Because non-cash transactions are required to be disclosed under the US GAAP, and this is actually a very huge amount. So that's why we need to disclose it. Though we are not going to report it anywhere, but that is going to be disclosed. Then question number 34. Harlow company reports the following for the year: purchase of new equipment, then proceeds from sale, purchase of land, proceeds from sale of long-term investment. So what is net cash flow from investing activity? What is net cash flow from investing activity? So let's do the calculation. So whenever you have this calculation of calculating this investing or financing activity, I suggest one thing to my students. I suggest just one thing. What you need to do, you just need to do one thing. First of all, just write inflow and write outflow on your scribble paper. Whenever you write your exam, you get a scribble paper, so that you have to write inflow and outflow. So inflow means what all is coming into your business. Okay, so let's see what all will be there. So purchase of new equipment, purchased, we have purchased something, so we have given cash for that, so it is an outflow of 1,80,000. Then proceeds from sale of old equipment, that is I have sold my old equipment and for that I have gotten cash. So how much for this? 45,000. Then purchase of land for 90,000 cash. Land we have purchased, so how much did we pay for this? 90,000. Then proceeds from sale of long-term investment, we have sold off the long-term investment and from that we have got 60,000. Now let's sum total this. This is 1,05,000 and this is 1,80,000 plus 90, 2,70,000. Let's do our calci. Minus. Okay, so we are getting 1,65,000. As you can see, option A and option D both have this figure of 1,65,000. So in the exam, how we should be very careful? As you can see, outflow figure is higher than the inflow, right? Outflow figure is higher than the inflow. So that means what? My outflow is higher. So this is my outflow. This is my cash used. So remember, in the exam, sometimes there could be given that outflow can be termed as cash used and inflow can be termed as cash provided. So this is 1,65,000 net cash used. So option A is the correct answer. Question number 35. Sutter Incorporation reports following for the year. So they are reporting this. So we have to calculate net cash provided by financing activities. Again, same approach I'll follow. I'll just use this inflow outflow wala technique. Just write I and O on your paper. Whenever you're doing the exam, no need to write all these full-fledged things in order to save your time as much as you can. So they report following for the year: proceeds from issuance of long-term debt. They are getting money from the issuing the long-term debt. So 2,50,000. Repayment of long-term debt. You are paying off the long-term debt. So what you need to add? You need to 8,80,000 is your repaying, that means outflow. Repurchase of treasury stock, you are purchasing your treasury stock, that means you are paying something, you are paying money out of your pocket, so this becomes 40,000. Then cash dividends paid 60,000. How much dividends did you pay? You paid the dividends of 60,000. Then proceeds from issuance of common stock. How much common stock did you get? 1,20,000. So this becomes 3,70,000. This becomes 1,80,000. Let's do my calculation. 37 minus 18. I think it should come as 19. Yes, it's coming as 1,90,000. And in the question, it's clearly given cash provided by financing activities. You don't even have to put your brains in thinking whether it's an inflow or outflow. Simply just do the math, and 1,90,000 is my correct answer. I'll grab some water. Okay, question number 36. Using the direct method, Palmero company reports sales revenue, accounts receivable increase from this to this during the year. What is the amount of cash collected from the customers? Very good question, very important questions. Let's do it. I'll open my this. Okay, now what is happening? Cash collected from customers. Just a second. Okay guys, so we will solve this question number 36 with the help of a logic. Okay, let's use the logic. So whenever we have the accounts receivable, we have the beginnings accounts receivable. In that we add the sales value, like whatever sales we are making, that value we will add. From that we will reduce the cash collections. We will reduce the cash collections from the customer. and that will give us the closing accounts receivable. Okay, now what is the beginning accounts receivable given in the question? Beginning accounts receivable is given as 60,000. To that I will add my sales. How much is my sales? 8,50,000. From that I will reduce my cash collections. Cash collection is given? No, not at all. We have to calculate that. And lastly we are getting 95,000 as my this closing accounts receivable. Let's do the math. So let's do the math. 8,50,000 plus 60,000 minus 95,000. How much we are getting? 8,15,000. That much is the cash collected from the customers. See, this is a question where we are not directly calculating the operating activity or investing activity or financing activity figures, but this is a question of pure logic. And since we have studied so much about the accountancy and we have a basic knowledge about it, so that's why we just it's not directly related to the concepts, but it's related to like using your common sense, using the logics. That's all. Moving on to the next question. Using the direct method, Oak Ridge Company reports cost of goods sold for the year. Inventory increased by 25,000 and accounts payable decreased by this much. What is the amount of cash paid to the suppliers? Now, how we will know the amount of cash paid to the suppliers? Let's open our notepad again. Not this one actually. New one I will open. Yeah, so whenever it is given that what is the cash paid to the suppliers, my inventory increased is given, my accounts payable decreased is given, my cost of goods sold is given. So first of all we will calculate the purchases. How much did we purchased in the year? So purchases in the year will be equivalent to the increase in inventory and the cost of goods sold. Whatever goods we have sold, that we would have purchased or not. So that we will be my purchases for the year plus 25,000. That will give me 40 plus 25, 5,65,000. Okay, then coming to the cash paid to the suppliers. So cash paid to the suppliers will be my purchases plus the decrease in accounts payable, because that much cash we would have paid. So 5,65,000 plus what is my decrease in accounts payable? 18,000. My 18,000. So that should come as 5,83,000. This is also a question of pure logic, using your common sense. That is, how much cash did we pay to the suppliers? Very simple. What are the total purchases and what is the decrease in my accounts payable? My decrease in accounts payable denotes that that is the amount of money we actually paid out as a cash to my suppliers. Moving on to the next question. Which of the following best explains why analysts examines a company's investing and financing activities together with its operating activities on the statement of cash flows? So why do they analyze? So first of all, to determine whether the company is generating enough operating cash flow to fund its investing needs without relying heavily on external financing needs. Is this correct? Yes. Why? Because that's why we investigate the investing and the financing activity. Because why we have all these three activities together? So that we can understand that whether we are generating enough cash from the operating activity that can fund my investing activity without more and more relying on the external financing sources from the financing activity. So that's why option A is the correct. Now let's see why B, C and D are incorrect. B, to calculate the company's gross profit margin. That is what the use of cash flow? No, we prepare income statement to understand the gross profit margin. Option C, to determine the exact market value of the company's equity. Do we calculate this from this? No. Why? Because from the this market value of the equity cannot be determined with the help of the statement of cash flows. Option D, to identify the errors in company's revenue recognition policy. Is this option correct? No. Why? Because we cannot identify the errors in revenue recognition policy with the help of this particular statement. Question number 39. So we have to calculate what, last line let's read, what are the Alston's net cash from investing and financing activity. So we have to calculate the investing and financing. In such cases, I just do one thing. I will write I for investing and F for financing, because I am seeing multiple numbers are there. So that should be my approach. Now, investing and financing. So investing, yeah, but I will have the inflow and outflow also, right? So I will write inflow and I will write outflow. I will write inflow, I will write outflow. For the financing also, I will write inflow. I am just writing the full form for you guys. Inflow and outflow. Let's start now. Okay. Issuance, proceeds from issuance of preferred stock. Preferred stock issuance, that means we are issuing the preferred stock, we are getting money. This is an inflow under the financing activity, 3.2 million. Done. Dividends paid on preferred stock. Dividends paid on preferred stock. This is a outflow and it will be under the financing activity. Then bonds payable converted to common stock, a non-cash transaction. Will it be reported somewhere? Because again it's a non-cash transaction. So will it be reported on statement of cash flows? No. Then payment for purchase of machinery, 4,20,000. Payment for purchase of machinery. Purchasing of machinery is an investing activity and this is a outflow. Then proceeds from sale of a plant building, 9,60,000. 9,60,000 is my inflow in my investing activity. Gain on sale of plant building is 1,50,000. That is not a recorded. Why? Because that is this gain is already a part of my proceeds from sale. Then a stock dividend declared on a common stock, non-cash transaction. Is this relevant? No, this is not at all relevant for us because again this is a non-cash transaction. So let's calculate my investing and financing activity. So for my investing activity, how much it is? 9,60,000 minus 4,20,000. That means I am getting 5,40,000. I am getting 5,40,000 as my investing activity. So I am seeing option A, B and C, all three have 5,40,000 is my investing activity. Let's calculate the financing activity. So my financing activity, I will take 3.2 million. From this I will reduce what? So we are getting 2.94 million, right? So option A is my correct answer. Coming to the next question, which of the following transactions should be classified as a financing activity on the statement of cash flows? Sale of trademark is a financing activity? No. Purchase of treasury stock? Yes, it's a financing activity. Then option C, purchase of equipment. Purchase of equipment will be recorded where? As an investing activity. Sale of trademark will be recorded where? Again, it is also an investing activity. Option D, payment of interest on a mortgage note. Payment of interest or receiving of interest will be recorded where? It will be recorded in my operating activity. So again, only option B qualifies for the financing activity. Moving on to the question number 41. All of the following should be classified as investing activities except, that means all of them are investing activities except one. Option A, cash outflows to purchase manufacturing equipment. Is this an investing activity? Yes, this is an investing activity. Then cash outflow to lenders for interest. Interest paid or received is recorded where? As an operating activity. So this is not an investing activity. Hence option B becomes the correct answer. Option C, cash inflow from sale of bonds of other entities held as investment. So this will be recorded where? Again, this will be recorded under my investing activity, though it's clearly written sale of bonds of other entities, not my own entity, because if it is the sale of bond of my own entity, it will go under the financing activity, but this is for investment purpose, so it will go under the investing activity. Option D, cash inflows from sale of a manufacturing plant. Again, this is also my investing activity, so automatically option B is my correct answer. Why? Because option B is my operating activity. Question number 42. Holobrox Incorporation's retained earnings balance was 6,40,000 at the beginning of the year and 8,10,000 at the end of the year. Net income for the year was 2,50,000 and no items other than net income and cash dividends affected retained earnings during the year. What amount of cash dividends did Holobrox pay during the year for classification as a financing activity outflow on statement of cash flow? Very simple. I will tell you how to do this question. So I have written it over here. Yeah. So one thing I have written down everything over here. So opening retained earnings has been given to us as 6,40,000. Then ending retained earnings is given to us as 8,10,000 and net income is given to us as 2,50,000. Now again, this is a question of logic. Whenever you see any question and you get stuck in the examination, or whenever I used to get stuck in my exam, or maybe when I am solving questions during my preparation, I would write down the figures in front of me so that I can understand. Now in my retained earnings, what is there? We will add the net income and we will subtract any dividends which we have paid out so that we get the closing retained earnings. So that's what I have written over here. Opening retained earnings, in that I will add the net income, I will remove the dividends from that, and then we will get the closing retained earnings. So my opening retained earnings is how much? 6,40,000. Then what is my net income? My net income is given as 2,50,000. From that I have 2,50,000. From that I will reduce my dividends paid. Then I will get my closing retained earnings. How much is my closing retained earnings? Closing retained earnings is 8,10,000. So let's do this. Let's do the math. Let's do the math for us. So 6,40,000 plus 2,50,000 minus 8,10,000. How much we got? 80,000. 80,000 we got as what? As my financing activity, as my dividends, the dividends that will go in my financing activity. Very simple, very easy, the very logical question. So you can see that if you know the basics of accounting and if you have studied the chapter really well and understood the concepts, you know the concepts, so you can easily solve such type of questions. So guys, that's all about the statement of cash flows. I hope you enjoyed this video, and a lot of concepts, a lot of doubts would have been cleared when we would have solved the questions. Still, if you guys have any questions, any doubts, please feel free to reach out to us. We'll be happy to help you out. Thank you so much.